We are seeing, strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a way to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not. Expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing. We're moving carefully. One of the things we're moving carefully about is that decision over that assessment, really, over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table.
The Fed has held rates steady at 5.25% to 5.5% and exactly predicted, or rather talked about exactly what the dot plot was indicating, that there are going to be 3 rate cuts which are going to be coming next year. And clearly, the markets have liked that. More importantly, you've seen a big cool-off come in on the yield, and I think that's bigger cheer for equity markets all across, and I think we're sub 4% now.
So Aisha, nobody saw this kind of a change in narrative coming from Fed. Everybody thought that, look, everybody knew that they will not cut rates last night. So that is on expected lines. But the fact that they've used the word there is good news on the inflation front and growth has peaked out. So what has Fed clearly indicated? Fed has indicated that inflation has peaked out, growth has peaked out, and the cost of capital in the world will start coming down. I think in this time, Aisha, Fed is just trying to be ahead of the curve, because post-COVID, they were so behind the curve that they were not able to control inflation. This time, given that they have access to data, they can read whether US GDP is going to move, what kind of growth assessments they have for 2024. They are just preempting a soft landing for the economy. But for me, the narrative is that the interest rate hike cycle in the world, courtesy Fed communication last evening, I think is evident, has peaked out. That, I think, is the biggest headline for all of us.
Yeah, and that was the big surprise as well. And I guess that's why you're seeing that big jump up on equity markets. It's been an extremely strong handover. The US pre-market futures have jumped up, strong close coming in for the Dow and pretty much across world markets. And Asia as well is picking up the same momentum. While Japan has ebbed out, you're seeing actually Hong Kong lead the rally. And that's pretty much what the GIFT Nifty as well suggests.